Lee, insurance in the trucking industry, commonly known as commercial insurance, is skyrocketing to the point where it's unaffordable for smaller fleets and carriers. What's causing insurance to skyrocket in the trucking industry?
Grayson, according to the Council of Insurance Agents and Brokers, premiums for the first quarter of 2024 went up by 9.8% in the commercial vehicle space. And really, that's driven by three things: proliferation and increase in nuclear verdicts, and that's basically settlements over $10 million involving commercial vehicles. The second aspect of that is the shortage of experienced drivers. Less experienced drivers becoming a bigger profile of fleets operations. And then what you and I are experiencing, which is vehicle repair inflation costs. Repairs in just passenger cars and commercial vehicles, the cost to get a repair is going up substantially year to year and quarter to quarter.
The average nuclear verdict is $33.8 million. $33.8 million. These smaller companies cannot afford that. And then they're forced into becoming insolvent and file for bankruptcy. How do we stop the nuclear verdicts?
We got to unwind that, right? So you go back to the first nuclear verdict, 2018, $101 million in the state of Texas. And then there was a tragic accident. The driver states that he avoided a dog that came out of a ditch, turned to the right, turned to the left. He ended up crossing the center line, and there were five family members: a grandmother, her twin sister, the mother, and then two children for that mother. So five people killed in that accident. It was on a two-lane highway in Alabama, and a verdict was rendered awarding the family of those victims $280 million in 2019. That was kind of like the beginning of these nuclear verdicts. And it's just the proliferation of the legal environment we're in. You can't drive down the highway without seeing a billboard saying, "Were you injured in a trucking accident? Call this number." We've seen this for the past 6, 7 years as these nuclear verdicts have begun increasing. Premiums are rising on the insurance side, but you're also seeing a deeper movement from the insurance industry and really getting into the space of, especially these large for hire guys, more than just looking at historical trends. That's basically what drives a lot of the insurance premiums. But now looking at what's the safety training? What's the maintenance process like? How young is the fleet? What's the average age of the trucks that they are driving? How do they do their reoccurring safety training? Are there any shortcuts that are being taken by any of these fleets? So what you're seeing is a more premium value on drivers that have perhaps 1 million miles of experience, of safe driving experience, or 25 years of safe driving experience. Those drivers with demonstrated experience, demonstrated safe driving performance are actually translating into stable insurance premiums, right? We've talked before about all this cost pressure that's on trucking in that industry. And you've got to find ways to offset that in order to maintain your financial viability moving forward. And it's harder and harder for those smaller people, smaller fleets that are 1 to 5, less than 26 trucks, which is the majority. Over 97% of the trucking companies registered with the DOT. So that's kind of like the state of where it is right now. And I think this opens up the conversation for autonomy, right? What impact does an autonomous driver have? If you think of that million miler, that 5 million mile driver who's got basically 40 years of safe driving experience, the simulation and the way these autonomous and these L4 companies are developing this, they're able to inject like 50,000 trucks per hour of operations and learnings and scenarios and edge cases and educate this AV driver. So it's not like that 40-year driver can only drive one truck at a time. In the AV space, the skills in which you develop on that driver is going to drive however many trucks you have, 100 trucks, 1,000 trucks, whatever that is. So imagine being able to have a fleet on the road of a 10 million miler or a 20 million mile driver. That's the opportunity for the experience in the traditional way of looking at safe driving. That to me is a very integral part of the value of the AV truck, the proposition and the value prop to the whole industry. A safer driver on road. What does that really mean? Well, this is where we're talking about where the rubber meets the road for that safety being demonstrated. We talk a lot about the Dallas to Houston lane. Aurora took a look. I think there were 30 fatalities in that lane. 29 of them would have been in the ODD for the Aurora driver. And when there is a fatality, there's a number of investigations that get done as far as accident reconstructions. The police do their investigation from weather conditions to speed of the vehicles to stopping distance, measuring skid marks, all sorts of different things that get measured. Well, they injected that into the simulation. And of the 29 fatality accidents that occurred with the Aurora driver from a simulated state taking place, not one of those fatalities occurred with the Aurora simulated driving. So we've got a use case, if you will, that eliminated those 29 fatalities on that lane.
Magical. Eliminating fatalities is magical. Aurora was very kind and hosted me at their Palmer facility. I was able to ride in the truck, and I have to say it. I've said it again, and I'll say it again. Their perception system was absolutely amazing. What Aurora built with that perception system, seeing 500 meters down the road, full 360-degree coverage, the little objects in the road that it's picking up. Absolutely well done to Chris Sterling and the whole team that built that system. Back to the nuclear verdict, I've been thinking a lot about this. In 1971, the United States banned the advertising of tobacco on radio and TV. What if in 2024, the United States banned lawyer billboards on highways? Would that lead to a potential decline? Because there is precedent here of banning certain forms of advertising. Tobacco is bad for your health. Well, nuclear verdicts are bad for your health because it's going to drive up the cost of your groceries, so it's going to force you to buy less wholesome groceries. So there's precedence again. Would that have any impact?
I'd like to see what would happen with that, but you can't drive down any major interstate right now without seeing a billboard that says, hey, are you injured in a trucking accident? Call this attorney. It's putting a tremendous amount of pressure on transportation as a whole because that cost just doesn't stay with a for-hire fleet. They have to recover that cost somehow. So they pass that on. What's different now versus 10, 15, 20 years ago is there's this vast amount of data where you literally don't have to wait weeks for bids to come in and review them and say, okay, what's the trend on the costs for certain lanes? There's this proliferation of data that gives you that information instantly, within minutes, within hours. Some brokerage, some fleets are actually guaranteeing you rate quotes within 15 minutes. All of those nuclear verdicts have to get bundled in and passed on. And what's happening is fleets are really having to look at things creatively. Do I self-insure more? Most fleets will have a tower. There'll be several different insurance companies that are built up at different levels. Company A maybe have 50 incidents between 5 and 10 million. Company B may be above 25 million up to 10 incidents. And now what fleets have to look at that and say, okay, do I take more of this risk on myself? Do I insure myself up to $200,000 per incident as my deductible? And what it's caused is a much more intense focus on actual things that make our drivers safer and better and avoid those nuclear accidents. From driver training to investment in safety equipment to investment in fleets. Some of the fleets will say, we want the safest equipment, the most current equipment. And what used to be a 4.5 or 5 year or 6 year age of fleet is now a 3.5 or 4 year. Well, that was great, right? Well, things were good, but now once we got into this freight recession, some of those decisions had to get deferred. And some fleets will do things like defer some maintenance items. It doesn't cause a truck to come out of service, but there may be some delays that they do. So all of that is bundled in together into this inflation pressure that comes on the trucking industry. And I do think there are some steps that our leaders in Washington can take that can help minimize that risk. Maybe it's not the complete elimination, but put some thresholds on it, right? Put some levels on that would at least allow proper compensation, but not excessive compensation.
Could the nuclear verdicts, inflation, the cost, general cost of operating the fleets pave the way for autonomous trucking just purely based on the economics?
Absolutely. You're in a compelling market where fleets that are surviving, and that's really what it is right now. It is a survival mode until we get a little bit balanced. Again, I've talked about this before about the growth that the pandemic did. Depending on what market you were in, maybe it was 3 years of compressed growth or 7 years. But everybody ramped up and built this capacity up to handle this growth that's not occurring right now. So demand is not back to where it was in 2021. So now how does that balance out? Is it going to be some of the smaller truckers that go out, the ones that are 1 to 5 trucks? Do they pull out of trucking and go work for a fleet and try to bring down the capacity that's out there? Or is it some of your larger fleets that are thousands of trucks? Do they take a few hundred? I passed a terminal recently, a major carrier, if I said it here, and I could see mothball trucks parked up against the fence. They've taken capacity out. The problem when you do that, Grayson, is in those fleets, the overhead, the corporate finance and HR and all the overhead goes with that. But I think you're going to see some movement with those fleets that move into different spaces. Maybe I can't do it. I'm getting $1.90 for the rate for the lane per mile. My cost is $2, but I can get to a broker and do it for $1.85 or $1.80. I can make that 10 cents where if I use my own driver, I'm losing 10 cents. So all of that pressure brings this focus on splitting pennies and being able to be economically viable for the future. So yes, it moves us to looking at what can be a safer, demonstrated safer product, as well as a cost reduction step that makes it more viable for a fleet to look at that and adopt, integrate, and scale AV.
Is the current macroeconomic environment the perfect storm to usher in this technology?
I believe so. I mean, it's putting all sorts of pressure points on these fleets that is very, very challenging. And it's the ecosystem. It's the OEMs. It's the fleets. It's the brokers. It's everybody that's under this pressure. It is a perfect storm in terms of rate, in terms of inflation pressure, in terms of insurance premiums going up, even where we have seen regulation and CARB and, okay, adopt EV. We just heard from Knight Swift, $200,000 more. It's more weight. I can't run it. I get 165 miles. All of that turns into more cost. I don't know of somebody that's willing to pay 20% more in their supply chain cost in order to fund all these types of things. It's not realistic. We got to be smart. We've got to work together. We got to find solutions that help us pull that down. And I do think there's room for the insurance folks to come to the table, the fleets to come to the table, the AV providers. Let's start working on that. Let's find those right lanes. What are the top 5 lanes in the 13 South Sunbelt states that have the highest nuclear verdicts? Is that where we should be launching our lanes for AV? So there's a lot of things there that we can think and do proactively that I think usher in AV trucks.
There's a lot of things we can do. It's a great James Carville line. It's the economy, stupid. It all comes down to economics. Lee, in your opinion, what does the future of the trucking industry look like?
It's a challenge, right? Most people were thinking, and all your leaders in the publications were thinking sometime during 2024. Some called it 2023. We knew that wasn't going to happen, but most people were more optimistic back in January about third and fourth quarter this year. I think we're pushing past that into a 2025 timeline for when we get a little better balance between demand and capacity. We're going to continue to get squeezed, and it's going to be a very, very tight market for the next 6 months, in my opinion.
Well, the market's going to be tight. We're going to have you on quite a bit here to continue to talk about the market as the markets change. Markets go up, markets go down, they expand, they contrast. The future's bright, the future's autonomous, the future is autonomous trucking. Lee, thank you so much for coming on the Road to Autonomy Insights today.
Thank you, Grayson. See you next time.